All right, welcome back to the program. Like I mentioned earlier, Professor Eregha is joining me. He's of the Pan-Atlantic University. He's a professor of economics. Hello, Prof. Good morning. Good to see you.
Yeah, good morning, Nancy.
How are you? I can't see Prof yet. Please, can you
I'm great.
punch Prof so that I can see him? Yes. Prof, I can see you now. Prof, how are you?
Okay. I'm
Now,
fine.
I do.
Yeah.
Now, let's just get into the issue. This challenge of inflation in Nigeria. I would like you to explain, perhaps in just a few seconds, an inflation rate of 33.2%. Was that the kind of number that you were expecting? And describe really this kind of inflation that we're seeing in Nigeria being experienced as against this time last year when inflation was at 22%. So we've seen like a 10% jump from March of 2023 to March to April, really, of this year. So explain this kind of 33.2% inflation and if that was what you were predicted to see.
Okay. Yeah. Once again, thanks for inviting me. Let me start by saying that you are aware why we find ourselves in where we are with regards to inflation. Last year, the president came on board and he took some of the bold steps that we needed to take, even though there are other cautions, other issues that should have been done before taking those steps. One of them is, subsidy was gone. And that will have to already energy price shocks that we're having from Russia and Ukraine, right? So subsidy was removed. And then exchange rate was also unified. Exchange rate is one of the major and crucial variable that determines, domestic prices, knowing fully well that we import so much, even though in terms of import, people argue with the concept that we are import dependent. But if you look at the numbers, we are not really import dependent. We are actually importing a lot of inputs and consumables, and therefore exchange rate is a crucial driver of that. Added to that was the fact that the pre-government of CBN or the CBN and the former CBN administration with the federal government that was in place had this ways and means or what we call monetary financing of large deficits, and that was also a major driver of inflation. So with all of that, you expect inflation trend to move, in the upward direction. Also conditioned on the fact that the Ukraine and Russia war was still, uncertain, and energy prices were still as so high as we saw. I mean, if you look at the numbers, for instance, diesel has moved to as high as currently more than 1,000, almost about is it 1,300 or something? So if you look at those numbers, with all of that, which are drivers of inflation, we expect that inflation should begin to trend. So I think that I by the trending, I think it's fine. The only thing is that what are we doing to reverse that movement? And in most countries of the world, and I think you just put up the IMF report that shows that in most countries of the world currently now, the upward trend of inflation is not decelerating in most countries, except most of these emerging countries or countries like ours, like Nigeria. And I think the reasons are not far-fetched. There are reasons why we still have that, even though in recent times we've been having some what I call positive or what I call gaining momentum with regards to our currency, because like I said, one of the major element and driver of inflation is how do we stabilize exchange rate, and I think that we're already having some positive movement around that. So we expect that to happen. In terms of my projections, with the decision by the central bank by moving what I call the MPR to about 600 basic points, all of us expected that there will be a reversal. That was the expectation. But the truth is that don't also forget that we are in the planting season. March is a planting season, and so the planting season effect will also sometimes disrupt the effectiveness of that bold MPRO movement from where it was in about 18.75 to currently about 24 point something. So that is also a major factor why we don't have the year-on-year decelerating. But
Okay.
month on month, we saw some level of deceleration, even though it was
Deceleration.
not significant.
I
Yeah,
think about a 1.8%
yeah.
deceleration. But it just towards this end you started talking about food, because I thought you were going to talk about this inflation, this kind of stubborn inflation which we're seeing, stubbornly driven by food. Of course, food prices trigger the headline inflation, because if you take a look at what the MBS released just a few days ago, was it on Monday? Yes, on Monday, close to 12 noon. As I was just ending the show, I just saw the report from the NBS. Food inflation at 40%. Now, that would lead me to the question of, do you see a holistic inflation reduction strategy by this government? Because you also mentioned earlier that the monetary policy rate that we have seen, 6% jump in 1 month actually, because the MPC met in February and met in March. Between that 1 month, rates were increased from 18.75% to 24.75%. We have a coordinating minister of the economy. We've not had that since President Jonathan left. Mrs. Okonjo-Iweala was the last coordinator of the economy. Why I'm asking this question is in regard, if you see a holistic inflation reduction strategy by the federal government that would include the Central Bank of Nigeria, because monetary policy alone seems not to be doing the work of bringing down inflation.
Yeah, so thank you so much. Let me take you back to memory lane, and I'm talking about historical event. Experience is always the best teacher. In the 90s, we had this kind of trend. If you look at the numbers, I think around 1994, we have inflation, trending to almost 57%. Now, at that time, what do we do that reversed the inflation from about 57%? And by 1997, from 1994 to 1997, we had an inflation of about 10%. What really happened? What happened was that what was driving that inflation was almost what is really driving our inflation now, apart from food. And what was it? It was what I call, monetary financing of large deficit, which is the ways and means kind of a thing that we did in the recent time. So what do we do that made us to move from about 57% in 1994 to about 10% in 1997? It was strong tightening of monetary policy. But supported with that was also tightening of fiscal policy. And then a third stance that was taken was to ensure that monetary policy, is used to attract capital in terms of FPI and other capital that could, lead to what I call reserve accretion, and that would bring some stability to exchange rate. So three things happened. There was tightening of monetary policy, there was tightening of fiscal policy, and thirdly was to ensure that exchange rate is stabilized, because exchange rate is a major driver. That's what we call the exchange rate pass through to inflation. So those three things were the things that worked for us as at that time. Now, currently, what is driving our inflation, apart from the food, is the same kind of, monetary financing of large deficits. So your point is valid, is that monetary policy alone cannot do it. But let's also not forget that we need to be a bit patient in the sense that the recent move by the central bank is already, gaining some positive momentum for us with regards to what is happening to exchange rate, which is one of the major drivers of inflation. And it will not have immediate effect. And let me also explain this. Prices are always sticky downwards in the sense that, and I think you'll be hearing this argument to say, if exchange rate is coming down, but food prices are also going up. It's like our producers are wicked and all of that. But the truth is that when most of these producers or most of these sellers still have old stocks, and now so it takes time for them to exhaust the old stock and then have some new stocks that are driven by the new exchange rate and then some other new factors before they can now begin to sell at new price. That's why adjustment downward is always not as easy as adjustment upward, right? So that is, and that's one point. The second point is that policies don't have a instantaneous effect on outcomes. Instantaneous in the sense that if you put a policy, don't expect that the effect to be immediate. Let's take the case of the US. In the US,
that's actually what I wanted to say, that when it comes to Nigeria, those of you that are professor of economics will be giving me a different view, that when it comes to Nigeria, the things they work quickly as they work. And you just took it out of my mouth at the US.
But in the US, it took about 4 months before we begin to see the desired effect, right? The effect is not going to be immediate. It's not going to be as fast as it should be. But don't also forget.
But if we took a drastic 6% upside to the rates, interest rates, which is one of the tools to fight inflation, And
So that we
I was
have,
not in the MPC. Of course, I'm not a member of the MPC. But I think that part of the discussions that went on in the room, Cardoso and his team, was that let's aggressively pursue this. And he did tell us that in February and in March. And we saw a 6% MPR rise, hoping that, I've not seen this kind of thing before, at least in recent times, hoping that inflation would come down.
Yeah, so that's my point. My point
Yeah.
is that we shouldn't expect instantaneous. The first thing that movement will do is to attract capital. Because one of the major areas we're having problem, there are about two price instability we're having: inflation and exchange rate. And exchange rate is a major driver of also inflation. So one of the things they needed to ensure was stability with regards to exchange rate. And one way to do that is to attract capital, knowing fully well that the export side is not giving us the kind of inflow that we need. And so that we first bring in the needed capital that would lead to reserve accretion vis-a-vis to stabilize our exchange rate first. And so when we calm exchange rate down, then we'll begin to see the effect going forward. That is one. But monetary policy alone can't do that, in the sense that if you look at the numbers, Nancy, if you look at the component of headline inflation in Nigeria, right, number one on the top is what we call food and non-alcoholic beverages. That takes almost about 17%, right?
That was actually what drove this one too.
Yeah. So now the question then is that what is driving food inflation? It's insecurity. Have we resolved the insecurity issue?
Thank you.
That is not a monetary issue.
That was why I asked the second question, if we're seeing a holistic inflation reduction strategy by the government that includes the central bank, since we have a coordinator of the economy. I know that the fiscal side will tell me, okay, President Tinubu actually put up a food security team, as it were.
Yeah.
I also know that there was a meeting amongst finance minister, agri minister, who else again was in that meeting, the budget minister, in January of this year to discuss food inflation. I also do know that the 2023-2024, I think, dry season wheat farming, the federal government is trying to put that together. There's also, I think, a 50% subsidy on agri inputs. But having said all of this, what more can we expect? Because you've just said food inflation is driven, food-driven inflation cannot be fixed by the MPC or the MPR or whatever it is. That has to be done by the fiscal side. Have you seen enough responses from the fiscal side in terms of holistic strategy? That's one. Number two, also, you also mentioned earlier, and I heard you, that there should be monetary tightening. Of course, what we saw in the 90s, monetary tightening as well as fiscal tightening. Where we are right now in the country, government seems also to be spending, as it were. Our budget this year is more expansionary than last year. Just yesterday, the Federal Ministry of Industry, Trade and Investment says it wants to come, it's rolling out 200 billion naira intervention fund for nano businesses, which the president announced on July 31st last year. There would be impact of this somehow on inflation too. You know, so when I take a look at all of this, I'll be like, okay, there's a coordinator of the economy. I'm not giving Basbos to Wale Edo. He's been on my panels a few times or many times, and I've told him this. But is there a holistic inflation reduction strategy? Because it seems that they try to say there is a coordination, but we are seeing different, or you are not seeing it the way I'm seeing it.
Yeah, so you agree that always for a long time, or even most countries like ours and Nigeria in perspective, we have always seen, the monetary authority taking the steps that are a bit clearer than the steps being taken by the fiscal authority. That has been the trend. Yeah. But I don't expect that to continue in a renewed hope agenda, in the sense that, let me give you a case. For instance, one issue we have not resolved today is, for instance, flood. Flooding is a major driver of food insecurity in Nigeria. And the last time we had flood till now, with all the emergencies that the government took till now, have we seen the outcome in terms of resolving the flooding issues around the Kogi and some of these states that are having as high inflation as we have today? The answer is no. The same thing boils down to the issue of insecurity. Farmers could not, go to their farm and farm with peace of mind. So these issues are supposed to be resolved basically by the fiscal side. And we expect some bold framework taken around that and implementation to be speedy in that direction. That's one part. The other aspect is the issue about what I call prudent spending, which has to do with tightening. And you agree, for instance, take a look. We have, was it 2015? Our budget was about 5 trillion. Currently, our deficit is even almost 3 times of our budget of 2015. So it means that we are on the expansionary path. Now, the question then is that, are these spending productive? So the issue about tightening in terms of fiscal policy is also about prudent and productive spending. And that brings me to the question of, for instance, we've been having, substantial or significant increase in FAC allocation to the different states and even to the central government. So the coordination should now focus on ensuring that such significant increase, and this increase are coming at a time most of these states and the central government has passed their budget. Therefore, we should ensure that this money is allocated to productive spending and not to financing things that are not productive. And doing that, we add to already deteriorating economy that is, a driver of inflation that we have. So my point is that when we talk about monetary tightening, there must be serious support with the fiscal side to ensure that all that is needed is done so that this collaboration and synergy could take us into the desired state of inflation that we are projecting to be.
Prof, you mentioned earlier patience, and I'm taking you up on a few points which you mentioned. You talked about patience. How much more patience should we have as Nigerians? How long should we extend our patience to witness the downward trend of inflation?
Yeah, so if I want to talk about with regards to inflation, for me, I think that by this month, we should still expect, month-to-month deceleration. But I think that the real effect will come in when, for instance, let this, what we call the planting season pass, which we move to almost about May to June, before we begin to see some level of harvest coming from the food side, for us to see deceleration around the food security side, because we are in the planting season. However, we need the fiscal side to complement what the monetary side is doing to ensure that the effect the desired effect is seen in terms of outcome. It might not be immediate, like I said. It will take almost about 3 to 4 months, but we see a reversal going forward if we sustain the exchange rate stability that we are doing for now.
Will the Naira's gain in the last few weeks provide some kind of relief or succor?
Yeah.
Yes, especially in April. We are in April now, so in May, when we get to see April's inflation number, do you think that the Naira, that's the foreign exchange component, would pass through inflation and we may see a deceleration in inflation figures for April?
Yes, definitely. I expect that by April, all things being equal, we expect some level of deceleration. But like I said, there's a caveat with regards to the fact that currently now we're also in the planting season, and that can play a role in terms of, what I call, for instance, the effect might be, the magnitude of the effect would have been higher if we are not in the planting season, right? But I expect that by April we should see some level of deceleration. Even the month should be higher than what we have in March for now. So I expect that to happen. Definitely.
Okay, you talked about, okay, still in the line of this question, we've seen a 6% growth in NPR from 18.75% to 24.75% where it is right now. And our economy is at 3.46%. Just yesterday, IMF upgraded us to, I think, 3.3%, which is, I think, still far less than what even the federal government projected for this year's budget. How, do you think that the economy has exhibited some kind of resilience despite high inflation?
Yeah, so yes, I think so, because inflationary trends, right, there are about two effects to how it will affect, the economy. Number one is from the channel of what I call cost of production. And so higher cost of production discourages, investment, and therefore you expect output to fall, right? But on the other way around, it also hampers what I call aggregate demand, or what I call purchasing power. And so from those two channels, we expect that growth will be affected. But for somehow in Nigeria, and I also think that maybe our risk sector is not really tied into, and don't also forget that even though there's this argument about the informal sector not that huge. But I think informality also plays some role in terms of integration of the informal sector to what is happening in the mainstream economy, right? That can also explain why we have built some of this resilience that we are seeing. If there is serious integration with our real sector to the monetary sector and then to the government, definitely the resilience that we are seeing will not be what we should be talking about now. So I think that is a major cause of why we have this kind of resilience. Yes, Nigerian economy has some level of resilience just because some of the productive sectors or some of the sectors that are contributing to growth are more in the informal than the formal. Okay, and that integration is not related. That can be a reason why we have this kind of resilience.
Do you think that the economy will be further scarred if the economy would take further sacrifice, bearing in mind that there's a forward guidance by the MPC led by Yemi Cardoso, giving us that forward guidance that there will be higher interest rates even in the future. Even at the last MPC meeting, he said at some point it will come down. But I can imagine what they will do on May 21 when the next MPC meeting holds. Perhaps they would also increase rates. So how much scarring do you think that will do to the economy?
Yeah, so your point, is bringing us to one critical driver of inflation, and that is anchoring of inflation. Anchoring of inflationary expectation. One of the drivers of inflation in our case, which we give less attention to, is the inability of the policy space to anchor inflationary expectation. And to do that is for us to ensure that we give some forward guidance to what I call economic agents. Okay, if you don't give some forward guidance to economic agents, they take their own different decisions, and that affects the outcome in terms of actual inflation. So one of the things that is expected as now that they are building the confidence that they are building in actually at the monetary side and possibly as supported by the fiscal side as we move on, is that we should give some level of forward guidance with regards to our monetary stance, and that has to do with telling us what we are expecting, right? What decision are we going to take? And when that time comes, we are consistent. In economy, that's what we call dynamic inconsistency, which is that, and which is so common in the fiscal side of our policy space, which is that government tells you, make some projection with regards to maybe their annual budget, I mean, what we call their national plan, for instance, or with regards to their MTEF. And when the time comes, government renege. That's dynamic inconsistency. And what to take that away, we need some credibility that comes from transparency and giving some forward guidance and sticking to what we think that we should do. And that brings us into taking decisions that are driven by what I call evidence. And that if we take decisions based on evidence and data, we should make some projection to what we are expecting and what decision we want to take with regards to whether monetary or fiscal policy and the synergy between the two of them. And we are transparent enough to build that credibility. I expect some level of anchoring inflationary expectations so that the outcome could lead to what we're expecting, and then we build more of this confidence, and then we see Nigeria economy, on the path that we are desiring to be.
Do you think that perhaps in the last 1 month or two, that the Central Bank of Nigeria raised rates too fast or quickly, as it were, because it took so long to raise rates? And how do you see us now catching up, bearing in mind that the next monetary policy meeting will be on May 21?
So first, don't forget, and this is also to everyone who sometimes, there is this argument, and one of my good Professor Waleke will always say that there should be a trade-off with growth.
Exactly.
And it does not support,
as if you know the next question I was about to ask.
So
there must be a trade-off.
Yes, you always have that mindset of the growth. Welfare kind of thing, which, yes, is fine. And you always tell me that some of us are monetarists and all of that. But the truth is this: the central bank has one goal: price stability. Why do you think that in the developing countries like ours, the central bank is having just one goal? The reason is because the fiscal authority will not be disciplined enough. And so one way in the literature to show central bank independence is for the central bank in a developing country like ours to focus on price stability. So when central banks stabilize prices, what they do is that they are adding to what we call debt service costs to the government. And that will restrain the government from, unproductive spending, and will make them to be prudent enough, because their debt service is increasing, and therefore they are taking a lot of their revenue into debt servicing. And so that one way to do that is for them to focus on price stability. And don't also forget that price stability has link with growth, has link with inflation, has link with growth, has link with the exchange rate itself. What do I mean? When there is price stability, investors can come in, because there is stability with regards to your prices. And so uncertainty is taken away. One way to know that there's policy uncertainty in an economy is rising prices or instability with regards to your prices. So when there's price stability, you expect that investors or stakeholders have confidence in that economy, and they can come to invest. It's not necessarily high inflation or high exchange rate. There must be stability with regards to your prices, whether exchange rate or prices, or inflation. When they see that for some time, it attracts investment, it attracts stakeholders to play in that economy. So that is one trade-off. So the growth trade-off is that indirectly price stability agendas or spur growth, okay, and also bring stability to exchange rate. So that is the argument. So for me, the decision they took is not. I support it. I support it in the sense that, don't forget that when this government came on board, for some time now, the CBN has not taken a decision with regards to what they should do with MPRO or with monetary policy decision, because they were not meeting for about 2 or 3 times.
Exactly.
And therefore, when they came on board, inflation was already going up, and they needed to take that bold step. When they took the 400 bold step, they didn't really see the effect, the 400 basic point. The effect was not really there. Why? Because when money supply, has two sides. What we call the net domestic asset and the net foreign asset.
Prof, we still not see the effect of a 600 basis point. I understand that there's a time for a pass-through, for
yes,
decisions pass-through mechanism. I understand that.
And it's not going to be immediate.
It's not going to be immediate. So when do we begin to see the 600 basis point increase on MPR take effect? And do you possibly expect another rate hike on May 21 when they meet next?
Yeah, so currently now, the current 600 basis points that will take to attract capital, right? And if we sustain that stability with regard to exchange rate, with time, and let's say in the next 2-3 months, and at most 4 months, we should see the desired effect in terms of what it will impact on inflation. That's what I think that will happen.
Okay, so what rate do you think in 4 months? Let's give them 4 to 5 months. At what rate do you see inflation going to? You are smiling. Don't say I'm putting you in a very tight spot. For those of you that are professors of economics and perhaps monetary economics, I think I'll put all of you on one show one day. I had to assemble a few of you. Yes, so that we can look at this question of possible trade-off, yes, between inflation and economic growth. But having said that, what kind of rate for inflation do you expect in the next 4 to 5 months from where we are now, if and when all things become equal?
So first point is that we must, in the next 3 to 4 months, resolve issue about food insecurity. But that's a major driver.
But we've been saying this now for the past 5 years or more.
Yes.
Now.
So my point is that luckily for us, and let me put this caveat, so that in 2017 we went into economic recession. In 2016, in second quarter of 2016 we came out of recession. Do you know why we came out? It was not necessarily ARGP implementation, because I remember that time they were almost about implementing ARGP, so it was not really the implement. Why do we come out of recession as at that time? It was global for commodities, which the global GDP picked up, right? And then added to that was that the sectors that drive growth or drive GDP in our economy are not even employment elastic sectors. They are agrarian, like agriculture. So when there was harvest, automatically we expect some level of food production, and then that took us out. So my point is that between May and June, where we should be having some harvest around June, that food insecurity issue that we have, even though we have not resolved the issue about insecurity, which only God knows when it will be resolved, even though the government is doing so much and we see some stability around that also, we expect that some harvest will come in, and that will complement what the monetary authority is doing with regards to decelerating inflation. And so it might not be, the magnitude might not be that huge because of other factors like what I call the fiscal authority supporting what is done with regards to spending, but we will see some deceleration that will come in. So I can't give numbers for now, but that will happen in next between now and
Are
June.
you trying to be smart with me so that I don't hold you? Because I will hold you accountable to it, because in those
Yeah, I
figures
don't
I
want
will
to
call you
mention
back.
numbers.
I will call you back and say, you remember you told me this. Or you don't even want to give me a range. You don't want to give me a
Yeah,
range.
so currently it's about, I think, 33 now, right?
33, yes.
Yeah, so I think by maybe anything post June, we should be seeing it going down to about, and let's also not forget that by April also we can see some effect. And let me also put this as a caveat. MPRO in the current state that we have might not have major effect on inflation. It might have indirect effect from exchange rate. What do I mean? If you look at our money supply, currently it's about 93%, moving from about 53. I mean, currently it's about 93 trillion, from about 52 trillion that we had in last year.
To 93.
And so people say money growth is a driver, but the question is that actually money growth? Because if we are not careful, it might not actually be money growth. It might actually be the fact that there was a revaluation. There are what we call foreign exchange component of our money supply that will reevaluate because of exchange rate unification. And that can mean that we just have that money in paper, not really in growth. So when we revalued in terms of exchange rate to the component that are foreign exchange in the money supply, which is the non-foreign asset aspect, then you see money supply moving to that level. So if the money supply that we have is not really money growth, the effect of monetary policy on money stock to decelerate inflation might not be that effective. That's the point I want to make. But from the indirect effect of exchange rate, yeah, we should expect, being complemented by food security and some of these things, we should expect exchange rate, inflation to decelerate when there is post-harvest from maybe post-June and all of that.
Okay. What sort of are we still in a trilemma? Are we still in a trilemma in the country in terms of chasing inflation, economic growth a bit quite tepid? What else again? Some other indices. How would you categorize where we are right now in the economy, and what can give us some kind of stability? Because we're still talking about stability, not even about consolidation yet, before we move to the acceleration stage.
Yeah, so I think stability is very important for now, and stability will also spur, growth. And please don't also forget, Nancy, let me also say this. Don't forget that the budget was prepared based on $800, right?
800 naira to
800
$1.
naira to $1, right? And so if with exchange rate that has peaked to almost about 1,000, 1,002, one of the things that will definitely happen with complementing that with inflation is that government projects in the budget will increase. Government project in terms of implementation will increase. And when they increase, expenditure aspect of the budget will increase. And therefore, if we don't have the corresponding revenue, you expect the deficit that we have also being increased. And the question then is that what is fiscal strategy to finance that gap that will come in? That is also important in complementing what the monetary authority is doing. So for us now, stability is very important. Currently, with where we have found ourselves, and that will take us into building momentum with regards to consolidation before we begin to talk about acceleration. So that is what I think that we need to think about going forward.
Prof, what have you learned historically with stubborn inflation that we've seen in the last few years? I did mention, of course, this time last year we were at 22%. So 22%, 10% jump. So what have you learned from historic inflation that we've seen in the country, perhaps in the last 10 to 15 years, not even about the 90s? You're a professor of economics, so Prof, are you a professor? Is it monetary economics or which one? But I know that you study monetary economics.
I'm a macroeconomics.
Okay, macro. Okay, so
Yeah.
so this is concerning monetary economics now. But I know that you can answer me really.
No, yeah, it's still within my sphere.
Yes,
yeah.
it's still within your sphere. So what have you really learned in terms of monetary economics of not inflation, really, in the country? What lessons are there to be learned?
Yeah. So let's say in the past, one of the reasons why we find ourselves in this kind of inflationary trend is what we call exogenous shock, which is oil price shock, right? So when in the past we have had oil price shock that affected our revenue, which will give us what we call revenue shock, vis-a-vis to terms of trade shock, and then that transmitted into domestic inflation. because there was a widening deficit and government could not finance its budget. That has been the trend, right? And most times when oil price picked up and there is demand for our this thing, and also for the fact that at the Niger Delta front, government also ensures some level of stability with regards to protecting our pipelines, and militancy issues are also decelerating. You see that oil revenue peaked, and then you expect some level of stability, and then inflation begin to trend down. In the current state, there's also serious oil theft. And so even though oil price is that high, we are not benefiting from that angle. That's one problem we had in the current state. And then added to that was also the NNPC, doing what we call, I don't know what they called, I've forgotten the name they called it, but not remitting, because they were supposed to remit to the central bank, and the central bank have reserve to be able to ensure some stability with regards to manage floating, but they couldn't do all of this. So all of this together as a way of influencing inflation. Now that the president has mandated the NNPC to remit now, and that is also the reason why central bank could begin to sell to brew the change, which they were doing before. I expect that in the near, short to medium term, we should expect inflation responding to that. If we don't reverse this aspect of NNPC remitting and not remitting, that's one. The second thing is that we also need to fight what I call oil theft in the Niger Delta. And I know government is doing so much around that with is it Tantita,
services.
What do you call it? Services and all of that. We need to also do that.
Prof, are you still there? Okay, I can hear you now.
So my point is that we need to do around controlling oil theft in the Niger Delta, and that is so critical for us to benefit from. Most of the oil producing countries benefited from the rise in oil price in recent times, except Nigeria, because of serious oil theft. And so that also is something that we need to look into. So my point is that in the past, it was oil price shock that had this kind of influence on our inflation trending up. But in recent time, what is actually causing is not really oil price shock. It's actually what I call quantity shock. In terms of quantity that we export, our quantity exported has decelerated seriously. At a time, it was even going less than 1 million or about less than 1 million. Now it's going to about 1.2 and all of that. We need to bring that to stability and then increase that so that we can benefit from the oil price. The oil price hike. Vis-a-vis to revenue, and then shrink the deficit and all of that. And I think we should be fine.
All right, Prof, in just 1 minute as we end, in the midst of all of this, let me ask you this question, and I'm even surprised at myself thinking about this now. Do you think that we're doing well even in inflation? Vis-a-vis that there was removal of subsidy in May last year by the president's pronouncement, but from what we have right now, there is still a subsidy attached to petrol, even though the federal government doesn't want to come out specifically to talk about it. And I guess that the NNPC, I'm assuming that the NNPC is taking that cost. So why I'm asking this question is, assuming that there is no complete subsidy and we are paying more at the petrol pumps, inflation wouldn't be where it is today. So we are doing pretty well. Agree. You agree. So you understand my question. So I wasn't just wallowing in my thoughts.
You are correct. One of the drivers of inflation is energy price. Energy price, right? And fortunately, the center, what we call the NNPC has kept the price at about 600. And don't forget, as I time we moved about 500, 600, our HLA was about 450. Now HLAs have moved to as high as more than 1,000, and we are still keeping at that price. It means that we have subsidy, right? Now the government thought it wise not to allow it to regulate the sector. We find a way to keep it the way it is, and then let's begin to bear the cost. Because if you look at, for instance, diesel price that have moved about 1 trade, that is almost the price that petrol would have moved to. The gap shouldn't have been more than 5 to 10%. But look at the gap, it's so high, about 50% or something. So that tells you that we have subsidy going on. But don't blame the government, because no government will want already the economy is already tense up, and so many people are already moved into hardship, and so many people are going into the poverty line.
Yes.
Therefore, they thought it wise to ensure that at that end, let's keep it and then get the cost for now.
Yes. So it's about popular as against versus economic theory. But I want to say thank you very much, Prof. It's been nice chatting with you. It seems, doing this show, every weekday makes me feel like I'm in an economics class every day. You know, macro,
You're already an economist. You cannot be going through this almost every day and then you'll not be
by
an economist.
association, even though I didn't study it.
Yeah.
But thank
Don't
you.
worry, we'll give you a degree very soon in economics.
No problem. I will gladly take it with my full chest and hands.
No problem.
Thank you very much, Prof.
Thank you, Nancy. Thanks for inviting me.
Yes, speak to you soon.
Bye-bye.
All right, I've
Yeah,
been speaking with Professor Perekunah Bright Eregha, who is a professor of economics at the Pan-Atlantic University. That's the much we can take on this edition of the program. Please join me again tomorrow, same time. I am Nancy Najib. Be the best you can be and be the change that you want to see. The news is up next with my namesake, Nancy, but she bears Oyedia.